I think if I just start, Omar, is that first of all, you made the comparison to crude, and of course the headline of the VLCC at 100,000, 130,000 or whatever is spectacular. But if you look at size for size or dead weight for dead weight, LR2s approaching 60 is every as bit as good, or MRs approaching 30 is every as bit as good as what's going on in the crude oil market. So even though the crude is getting the headline because of the actual biggest dollar sum, they are the biggest ships, and dollar for dollar, you know, the product market is doing just as well as the crude market is doing. The behavior we're seeing, as Anthony alluded to, is that they're taking the cargo and they're starting to, in size, start to talk through storage, and we're seeing a lot of arbitrage activity, very unusual behavior at the moment. You're seeing even all arbs all over the place open. For example, obviously we talk about gasoline, diesel, jet fuel, but you're even seeing naphtha arb opening between the US and China and Japan, for example, which is an extraordinary long distance, which is helping out.
And does buying back stock have some sort of negative attribute to it from the big picture? And does that force you to change?
Yeah, I don't know about that. I would tend to say that first and foremost, you need to feel comfortable about the near-term outlook for your industry. And one of the things that we're sensitive to is just we're in completely uncertain times, and so freight rates are quite good. Cash flow is a colleague of mine indicated cash flow is everything. And so in the near term, things are quite good. The question is, how long does that last? Ultimately, you need demand. And so we have storage opportunities on crude. We have storage opportunities on the product side of the business. Both of those inure to higher rates. And so rates in the near term look quite attractive. But ultimately, we need to see the world come back to normal. And so I think even though probably the most attractive thing you could do relative to your share price today is probably buy back your shares, but at the same time, cash is quite important. And so, I understand Tony's comments. I'm sort of a low leverage kind of guy in general in shipping. I think a lot of shipping companies have too much leverage. And so I can certainly appreciate that. But I mean, if you're trading 50 cents on the dollar, that's a completely compelling argument. The question is the NAV solid? And so that's the thing that you have to be convinced of.
Yeah. Robert, what do you think of that? Obviously the valuations are at big discounts relative to NAV. What do you think with that incremental dollar coming in? Do you hold on to it, or do you think about buying back shares?
I think we just have to look at the big picture. So, the market has been, the stock market and your stock prices have been betting against the product tanker companies since the second week of January. Since the second week of January, people have been thinking in the stock price that rates will go down. In reality, since the second week of January, rates have not gone down, they've gone up. We have, as a sector, I mean, there are a few sectors, I think, in the whole world outside of the tanker sector that you're getting sequentially stronger earnings. I mean, the fourth quarter, the first quarter earnings are going to be better than the fourth. The second quarter guidance right now is going to be better than the first in the sector, and year over year too. And that's great. So everything indicates strong cash flow, et cetera, et cetera. But I simply think that we serve our shareholders better right now in focusing all our efforts on the safe running of the company, and not, spending time on the stock screens. And this is coming from, myself, who normally would be very happy to do the trading, etc. But what's most important is the actual operations of the ships right now. the companies will probably trade below net asset value, even if we get a clear sight of longer term earnings for some time, because the stock market itself will take a little time to repair itself. So I don't think you're really giving up that much opportunity at the moment by not buying stock. And what you are doing is you're giving your long-term shareholders, you're giving your new shareholders who are accumulating stock at great prices a much safer investment. Because what we can see out there is not just the short-term cash flow is great. Right now, they're pricing this sector as if these companies have liquidity issues, which clearly they don't. Right now, the short-term is fantastic. It's powering up the companies to get through whatever. And the long-term fundamentals are getting better all the time, in the sense that what's great to the product market is the supply side. Supply growth will probably go negative pretty shortly. There's a combination of, it's neither a combination of aging as well as just no new buildings. But it's not the imperative right now to maximize the value of the stock through buybacks. The imperative is to give your long-term shareholders the platform from which they can invest in and get great returns in the future. And then later we can reward their confidence and trust in one way or another by giving them, valuation, return on capital at that point through buybacks or greater dividends.
Yeah, I'd like to add to that I totally agree with Robert's comments. We entered the year thinking that we approved a share buyback program, and we thought that we were going to have an opportunity to do quite a lot of that, given where our share price was. And we started it off, and we acquired less than $150,000 back of our own shares. We wanted to do it gradually to see how the market panned out, and then maybe accelerate if the markets confirm that strength throughout the year. Of course, then the coronavirus outbreak and the ensuing developments made us slow down and altogether stop that buyback program for a while. We then bought another $100,000 or so back of our own shares at very discounted price. I mean, we were trading at around 30% to NAV, 70% discount. So it was such a big opportunity that we decided to, only in a marginal way to pursue it. But our priority is, as Robert's, it's the same. It's to deleverage and to ensure that the companies are there and strong and able to pursue opportunities over the next 2 years. Right now, we believe we're going to have a very strong year this year, but of course there are concerns about what then that might entail for next year. And so we want to have ample liquidity to deal with a weaker market if there were a weaker market in the future.
Maybe Eddie, given the order book is low across the board, shipbuilders are obviously, they must be looking for business. What have they done in approaching you and trying to win orders from you? Are they doing anything different? Obviously, 7 or 8 years ago, it was the eco-design concept. There's a lot of talk on propulsion technologies. Have you noticed the yards getting more aggressive in trying to win business from you?
We have not been in a discussion with shipyards, so I want to make that clear. But our impression is that design-wise, there's nothing new in the market. There have been experiments in larger sizes, and as you know, larger sizes use alternative fuels, but not in the medium-range segment. So we haven't seen anything besides very few vessels which have done dual-fuel designs. We haven't seen anything really dramatic changing from the shipyards. We have not seen new technology coming out. And certainly, the shipyards have not approached us with anything different than what they used to a year ago. The only difference today, I must say, is that prices are softer. And it's somehow easier to find finance especially in China and Japan, in case you're building in local shipyards. So there are incentives to build in local shipyards, and you can find a financial institution to back you up. But as far as new designs are concerned, and I haven't seen anything in the market. I don't know if the larger companies which are in the panel have seen anything.
More business. I think the current environment where you really have a lot of uncertainty, and as been alluded to by all the conversations on this call today, none of us, we can see the immediate future, but we really just have to be prepared for what comes next. And I think that will lead to that the current sort of really slowdown in new building ordering will continue because of the uncertainty about the market, and of course about the uncertainty about the future propulsion system. So I think today is even more clear that the number of new builds that will come to the market will really dwindle and decline in the coming years.
Omar, I wouldn't mind jumping in and just mentioning something that Robert alluded to in the beginning, which is, I think, really important for investors and anybody listening to understand, is that the headline rates that you hear about VLCCs or Suezmaxes sound very impressive, but if you do the math on a capital adjusted basis, the returns are as impressive on LR2s, LR1s, etc. So, I think we're all enjoying a very strong market at the moment. And I just want to say that I find that the discounts to NAV at the moment, the pricing of shipping stocks generally, at least in the tanker space, are just extraordinary. And in all the time that I've been in this business, I've never seen anything like this, where you've got not simply asset values, but charter rates at the kind of levels they are today versus the current stock price. And clearly, there's a lot of uncertainty. But I really kind of question how much risk really is there at these prices, right? I mean, the physical market is doing well. The physical market pricing is still way up there in terms of investing, but the paper market is just dirt cheap right now. And I think that's just something that we'll all look back on and say, why the hell didn't we buy up all our stock? Why didn't we take everything out of our 401ks and put it into our own company stock? Why the hell weren't people buying it then? It's really quite an unbelievable thing at the moment.